Is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Friday, ladies and gentlemen, finally. Look, this is a quick video preview for the webinar, which is going to happen in a few moments, and it was a very interesting week. We finally got a little bit of selling. Why I'm saying finally, because you probably have seen my webinars before where I keep on saying that everything is way too overvalued and there's no point in buying at the top when, well, just common sense, right? So we're finally seeing this little correction in the market. Look, about all this and a little bit more in the webinar. Stay tuned. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, okay, hello, good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today, ladies and gentlemen, today is Friday. Today is Friday, the 7th of November, 2025. Still, yes, so we are in the second from the last, second from the last, the pre-last month of this year. Look, I hope so far the year has been a good one for you. It's not really like hurting you too much, or on contrary, maybe it's pleasing you a lot. So I hope that's, the second option. I hope the markets are in your favor. Certainly the markets have been on a quite a roller coaster ride, if the ride is only to the upside. So we keep on getting higher and higher, and finally we're seeing slight drops here, slight signals for a drop. Is it going to be a small little drop for another big ride back up, or actually are we going to see something, something more negative? Anyway, look, about all this and a little bit more in the webinar today. It's going to be, like I said, it's going to be, I have a few pieces of information I want to go through with you, ladies and gentlemen. But before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. In the meantime, I'm gonna do my usual good morning in the chat room. Good morning, everyone, ladies and gentlemen. Having difficulty to type today. Good morning, everyone. Yep, I have to remind again everybody that, look, this is an interactive session, so feel free to ask questions, feel free to throw in your input if you wish. That's more than welcome, because again, I do love a good conversation. Hey, well, that's me. But yeah, feel free. As always, yes, it's like I said, the questions, the comments are, or just the statements are more than welcome in this show. First of all, of course, I hope you can hear me and see me well. I hope there are no interruptions. I hope the stream is running fine. My microphone seems to be working. Yeah. So I think everything is running smoothly. Ladies and gentlemen, also, before we go any further, as always, a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, as you saw, I already clicked on the economic calendar because I thought I wanted to put that one actually before the charts. So, look, yesterday we got a few pieces of information, to be honest, and yesterday, I'm gonna go through yesterday first, because again, this week we had some other information, other data, but yesterday we got the Bank of England. I think this was the kind of the big moment for everybody who's trading the British pound and the FTSE. So the bank basically went for the same rate as we were expected. And look at this. So if you remember in the beginning of this week, I talked about this and I said, look, keep your eyes on the votes, like how many are in favor of the cut, because the forecast was that there was going to be 3. But what I said, that If it's somehow going to show up at 4, now that's where the interesting bit could come in, and we could see a nice reaction in the British pound and the FTSE 100, which I'll jump in a bit. But this is, like I said, this is what I was talking about. This is where the kind of it narrowed down the difference of how many people are in favor of a cut and how many are in favor of unchanged, and to keep the rate unchanged. And like I said, the kind of the gap narrowed. So now we're kind of expecting, I think, a possible cut maybe going into December. Hey, so December time, it's going to be 18th of December when we're going to get the interest rate decision. Yeah, look, I mean, this is going to be an interesting one. I think that I'm just going through some information right now, just trying to double check everything. So I think that, yes, there is a possibility for a December cut of 25 basis points, basically dropping the rate below 4%. And if we do get a cut, so since the beginning of this year, we had like how many cuts? Like 1, 2, 3. So 3 cuts for now we had. So basically we started off the year at 4.75. So 3 cuts by 3 25 basis point cuts we had already. So look, again, it's an interesting situation because we understand that UK kind of has a little bit of a problem with inflation. Okay, it's stabilized lately at 3.8. So the headline year-on-year inflation did calm down at around it calmed down, and it didn't come down, it calmed down. So it remains around 3.8 from what I can see here, and for the last 3 readings were at the same 3.8. So in a way, it is well above, almost double above the Bank of England's inflation target. But still kind of, they might say, oh, it's still manageable. So because now we have to deal with the problems in the economy, we want to boost, lending, and we want to create more of these, mortgages, because we want to boost the young people to buy more homes, because this is what Rachel Reeves was talking about in the press conference, in the morning press conference, which she held in the beginning of this week, and it was about the upcoming budget, which is going to be at the end of budget announcement, and all the tax hikes that she's going to do at the end of November. So it was kind of this week's meeting was more of this press conference was kind of more of a warm up. You could feel that she's a little bit uncomfortable, and to be honest, personally, what I said on Wednesday, that I don't see the point of having this meeting, because you just basically talked about how great we are as a nation, and how great they are as a nation, and how everything is everybody has to make their bit, but put in their share of the kind of into the economy, and these big nice words, which I really don't like that, when it's like somebody's trying to avoid speaking directly. Just say it out loud, say it what it is. What is that? No, you're just making this froth around, sprinkle it with candy, or trying to make it nice, but actually over a kind of a rotten apple, so you're trying to cover the problem with these big nice words. So, which I don't know, honestly, is like it's way too much to handle. It's like you kill your and when she gets confronted by by the press on exactly direct issues, she's just going away from the kind of answering the question. So what's the point of this? You don't want to admit, you just want to put it out there in paper. You just don't want to say it out loud, and you just want to put it out there in paper. So kind of avoiding. So I think that this is my problem, is that you don't stand for what you say, or what for your actions. So if you believe in that things have to be done like that, then just stand by that. If you believe that, but then again, say it out, say it. But anyway, that's probably my issue. That I expect too much from from people to basically mean what you need to mean what you're saying. So you have to actually stand up for your words, or not trying to cover it nicely or whatever. Anyway, it was frustrating to watch, to be honest. It was like just I was hoping to see that she's gonna actually say it, but she didn't. So anyway, in fact, just whenever she wants to say, whenever she's asked to kind of say it, she just says, "Oh, how great we're how great they are as a nation." Again, it blows my mind, honestly. I get it; it's politics. I totally understand it, but it's not really. It's damaging for your brain cells. Anyway, that's me probably expressing my opinion, my frustration about this kind of fakeness in a way. Anyway, but coming back to the the BOE, well, these guys are at least more straightforward. Yes, there is a problem. Yes, inflation is an issue, but at the moment it's kind of okay. Let's go potentially for a cut. There we go. Straightforward. No issues there. The economy is still okay. Still kind of growing-ish, but I think they understand that everything's going down and everything. You need to start cutting rates because you need to increase lending, and this is, like I said, this is something that they want to do right now. They want to basically increase the mortgages, the amount of mortgages taken. So maybe this could boost home builders, because we know that around 80% of the UK's economy is actually service sector. So you have your financial systems, you have your builders. Actually, that's that's actually not manufacturing. You still import a lot of stuff, but yeah, you provide a service. So basically, everything is more service, and you need to boost that side of the economies mainly. And lower, you want it or not, but lower interest rates are the key in here. And if you think that might damage inflation, that create more inflation later on, well, it seems like it's a problem for later. First let's deal with the bigger problem, which is the labor issue, the economy issue. So let's boost it as much as we can, and then we'll deal with inflation. We'll see if it's not going to backfire or not. But anyway, so another thing that that came out yesterday was the Canada's IV PMI came out kind of really, really bad. I would say, yes, it's still in expansion territory, but nevertheless, look, the forecast was already on the lower side, but it came out boom, like straight away from 59.8 to from 59.8 to 50. Like, look at this blue columns here. This one, 59.8 to 52.4. I mean, that's a bit of a blow, to be honest. But look, the problem that we're having still is the labor issue, right? And I said it several times, and I'll continue saying that. Where's my Markets.com YouTube channel? Basically, ladies and gentlemen, I have been saying a lot of things recently in my videos. So this is one of the videos that I did this week. I talked about it. Quick little correction on my side. When I was in the beginning of this video, I was kind of hoping, I was saying that we will receive JOLTS, but no, because again, it's delivered by Bureau of Labor and Statistics, so U.S. Bureau of Labor and Statistics. So no, I mean, we didn't get the JOLTS as I was hoping to get, but honestly, it was my little mistake. We got ADP, but the interesting bit in there was that we got a hike here, so there was a little bit more jobs created in a way. So in a way, kind of, giving this a little bit of positivity. I don't know if, ADP was asked to deliver, to show a little bit of a higher number, not to demoralize the market, the stock market, which got kind of hammered this week. So yeah, it's like I said, it's an interesting Interesting period that we're going through. Sorry, something happened here. So it's an interesting period that we're going through right now, and and I think that yes, every little job number anywhere available, everybody's getting picking up on that. Before, ADP was not, it was looked at, but it wasn't, let's say, didn't carry that much weight as the NFP did. But now, given that we're still in the government shutdown, and we still understand that there are issues, and hell knows when we're gonna get the numbers, when they're gonna come back from the shutdown. I think that I think that they hit the record. It was like, now we're only 37 days. Let me just double check. I have the calendar here. So this is the kind of calendar, the clock here. This is the official White House website, where they have this clock here, ticking, showing how much has passed from the government shutdown. So yeah, 37 days and counting. I really don't know when they're going to come back, and the problem is that today we were supposed to be getting the NFP. It still is on the calendar here, you see, but it also includes the previous NFP, because let's face it, we have two NFPs which did not really, well, one NFP did not come out, and well, we're not going to get another one today. It's a shame, because then the market starts looking at numbers provided by other independent agencies, such as yesterday. We got the, where's that? Let me find it in the calendar. Challenger job cuts. Like, normally people don't look at this much. I never knew that this was provided by Challenger, Gray, and Christmas. Christmas, okay. Launch the chart. So basically, why is it like that? I know. Wait, let me just get rid of this. Let me just save this. And now we can. So yeah, this is what I'm talking about. Look at this. Look at this problem. Now, the number that came out. Let me show you. I think this is not updated yet. No, this is. Oh wait, no, it is updated. Sorry. So this is updated. Yes. So basically, the problem that we're having here. Look at this. It spiked up. So we did spike up back in March here, very, very, very much, and then we declined a lot. So basically, that's how much, like we were like, what was the problem? Basically, that there was like so many job cuts planned. It was around like 2 million and something. This was 200K. Where's that, John? Yes. So this is like I said, we saw a spike here, and the 153K jumped here higher. So I mean, wow, that was, sorry, not 1 million, not 2 million, sorry. So 153K jump. It was a quite significant jump, to be honest, from 50 to 150. So it is a lot, and this is the issue. I mean, I understand the number is lower than we had in March, but we always look at the tendency, the breakout. This was like, okay, smooth running here, but now this year the data is crazy, and everybody's like slashing jobs, and this is the issue. And this is where the stock market is not feeling the love a little bit, because I honestly, I don't know how many times I said it in the videos. I recently honestly did a lot of videos, MarketsTalk, this webinar, my separate top news videos, where I explicitly said that the problem is that AI is going to be taking jobs, and nobody thinks about the transition period. Yes, AI is good for your companies, which are creating more opportunities for themselves, to be honest. Look, they're creating they're balancing the books this way, that they're becoming more profitable. And this government shutdown recently did help out a lot of companies to make some deals. If you remember, in the beginning of October, when the government went into shutdown, and I said it several times, and I'm going to keep on repeating in every webinar, that it was so convenient for all the big companies to go and do deals during this government shutdown. It seems like it was something like planned or something like arranged in a way, and I wouldn't be surprised if it wasn't. Now, yeah. Now the thing is, like I said, it was so convenient that that the government was in shutdown, because you're not getting bad job numbers, because the job numbers are bad. They don't look very good. And in combination, when you're saying that, oh, I'm going to do a deal here and going to do a deal there, it's an AI deal and blah blah blah, and you're. But then everybody in the same time, for example, you get bad job numbers, and then everybody's kind of, so wait, you're making deals, these AI deals, but those are actually harming the jobs. We're seeing more layoffs, and because of that, so why is it a good thing? And this is the thing, everybody starts asking the same question. Is it good for you, as for your books, or actually is it actually is beneficial for everybody? Well, and finally this week we're seeing some sort of sense coming into the market, where everybody starts understanding that it's good for the companies, yes, good for profitability, but okay, the stocks enjoy their moments, all your big Nvidias and then all those companies, and everybody, like this is Nikkei, for example. Nikkei had a major decline. Look at this, to the downside, boom. We're currently resting on the 20-day SMA here on the daily chart, and then that's the middle line of the Bollinger Band, and we're currently resting here. So look, what I said to you in the beginning of this week, or actually this week, I said that if this is going to hold, we might actually see a rebound. Because maybe we'll see retailers actually driving the stock market back up a little bit. Now, I'll show you what I'm going to jump into the US. I'm going to explain a little bit more. Now, Shanghai Composite, look at this beautiful move back up. 4,000 somehow is providing good resistance, and it's acting as a good area of a hold up, before, let's say, for moving further north. So long story short, for now, I am looking at this. I'm looking at this market here, and if we do clear that psychological 4,000 zone, then great. Yep, more buyers could join in. Now, look, Dow Jones Industrial Average. Look at this. This is what I talked about on Wednesday as well. I said, look, yes, we had a great rebound. This territory here, this area around the 47,000, just a little bit above that, provided good support. We rebounded, we pushed higher, but then I said, look, wait for a break of this downside line. Yes, it was a tentative downside line. This one's taken from the high of the 30th of October, but we need a clearance of that downside line. If we can get that clearance and we see the body of the daily candle staying above that, great, I'll go higher. Did we get that? No. So there we go, boom, to the downside. And like I said, this is just the market kind of realizing that there is a problem. There is a problem, and this problem will remain, because it's not only jobs now. It's not only jobs, it's also, it's also energy. Can you have enough energy for all these data centers? Can you? No. So can the grid, withstand that? Because what's going to happen? The priorities are going to shift. It's not going to be the people where the electricity will have to go. It's going to have to be AI, and it will be kind of rerouted more towards AI. So what honestly, okay, I get it. Like you're expanding, but who's gonna to whom are you going to provide these services? I think that the idea is to kind of really put people down, like to make them as poor as possible, so that they would be submissive, and then you can then they will all work for you, because then you can cut they can work for pennies, and basically this way the poorer the person, the more submissive that person is. So it's a, it's a common strategy, and I think that this is what we're kind of heading towards. So again, look, a little bit here's a little bit of pessimism for you in this morning. But what I'm saying, but I'm a realist actually. I'm not a pessimist. I'm a realist, because this is what kind of happens, and this is what we see happening in other like countries, for example, and this is kind of a tool that you always can use. This has been used in the prehistoric times, Middle Ages, and we're no different. So long story short, what's going to happen here for now on the Dow? I'm going to keep an eye on this little 20-day SMA. So from the technical picture, I'm going to keep an eye on this 20-day SMA within my Bollinger Band. If we do drop below it, I'm going to lean a little bit more towards the downside. So these big boys started selling off, and which is okay. Look, it's quite normal. And look at this AMD. By the way, AMD, I forgot. I was watching this myself, but I totally forgot to mention this to you. But anyway, maybe it's not too late yet. Basically, it's one of my favorite patterns. And if you have been watching me for a while, you'll know that this is one of my favorite patterns. And this is whenever we have, let's say, a big rally and then a gradual rally, it tends to break to the downside. This is one of my favorite patterns, and the same in the works for the downside. I really like that one. Whenever we have a big decline to the downside and a gradual decline to the downside, then we see, we could see a nice push back up. So, and in this case, yeah, like I said, this is the opposite, and we broke that. Fantastic. So we'll see how this is going to play out today. Maybe a little bit of retracement, but look, at the same time, we fell below the 20-day SMA on my Bollinger Bands here. It kind of opens the door towards lower areas as long as we stay below this territory, and I'll explain you which territory exactly. Let me just mark. So I know I'm applying technical analysis on stocks, and I normally don't try to do that, but just this one, it's really tempting, honestly. And this 243 territory is providing, if it provides good resistance, then yes, I'm going to continue targeting the downside. Looking at the big boy here, NVIDIA, look at this beautiful thing. Boom to the downside. Very nice selling. Finally, not that I'm kind of really against NVIDIA or something like that. No, it's just I'm pro logic. We had our fun, and nothing can really go all the time to the upside. So okay, here there's no logic in technical analysis, so I don't really think there is point to apply anything. It's on this particular instrument. I think support and resistance levels are actually going to travel a little bit more than any trend line. So for now, what I'm watching here is that yes, we are approaching a key area of support near the 185-ish zone, and then we'll see if we can rebound, because this area also kind of is coinciding with the 50-day EMA, sorry, shown as the green line. So a good potential target. These guys finally also are getting hammered, because again, there are issues of valuations. And funny enough, we started selling off when Michael Burry, the guy who, the famous, the guy on whom the Big Short, the movie Big Short, is kind of based on, and the guy predicted the issue of the subprime crisis, and I think now he's kind of calling it the same thing, because. And I really don't disagree with him, because look, I said it in my previous sessions as well, that the problem is that all these AI deals are kind of now funded by private equity. So basically, you're tapping into your pension funds, your insurances in insurance funds, and like your 401ks. This is what you're tapping into, and isn't that like destined for whenever big deals are getting funded by private equity, it's alarm bells. These are alarm bells, and it doesn't really, because look, what I said in my previous session, and I think I'm going to continue repeating this over and over, because what I said, that first you go into banks, right? then the banks say, you know what, we have enough exposure, enough. It's way too risky because we evaluated, our kind of possibilities. So, and to be honest, the banks were investing earlier than than now. So it's always like this. So whenever the retail investors start to pick up on something, then it's a little bit too late. So first, the banks were ramping everything up. The stock prices were rallying. All these big boys. And there we go. These guys. So all these, they were ramping up. The prices were rallying and everything. So they were enjoying the moment. Then it kind of fades out a little bit. Then you need to start, issuing maybe corporate bonds and stuff like that. But then if that doesn't kind of click, you don't get enough money from that. The last resource is always like private equity, and then you convince the public that AI is the big thing, and this is where it's going to go, and everybody's like gladly go in and invest into their money into it. So, and then you have a problem, and then it doesn't. And again, everybody's investing into AI, which doesn't have really like yes, it will be, it will stay. But is it actually, can we actually feel the results right now? No, not really. We don't really know how much return we're going to get. And honestly, everything revolves around OpenAI, which is not a public company. So nobody can see what they're doing. If they have enough power, money power to build or deliver on all their projects. And of course, they're working with Oracle, but honestly, like all these deals that recently were made with OpenAI, like it's like, I think there was a joke because Bitcoin right now is suffering, and I think there was a joke that like alert, Bitcoin needs to quickly establish a partnership deal with OpenAI in order to boost its value back up. I mean, that was the joke, that's the financial joke here. And yeah, this is the interesting period that we're going through. But like I said, this is where all these companies are making these big deals with OpenAI, which is not a publicly traded company. And what's interesting as well, again, I will need to learn a little bit, read a little bit on this more, but maybe you can do your own research as well. It's just like, it's basically apparently like if you're doing these acquisitions or in these projects, where you're investing, and if they're and if you're, let's say, acquiring something, but if you're acquiring less than 50% of what you're acquiring, it doesn't, it's gonna goes off the books still. It's not really kind of that you own this asset. So officially then becomes, it's not like an asset owned. So yeah, it's like more an expenditure in a way, so you kind of write it off or something. But again, please do not hold me on this these statements, because I need to do a little bit more research. I just wanted to throw it out there for you. Maybe you can do your own. But it was an interesting thing that I heard this morning, this morning. Looking at the stock here of Amazon, look at this beautiful rally. Initially created a new all-time high, and then boom to the downside. 243 around here where we are right now. So this is a good area of support, which is the highest point of February. It was previously the all-time high, but we surpassed that. Again, Amazon creating a big deal with OpenAI. It's and that boosted the stock price. Anyway, where's that Amazon deal open AI? Let me just double check. Yes, Surges. Yes, yes, it's a 38 billion deal. Okay. Anyway, we had this major thing here, and I honestly think like it really smells like money laundering, everything with this OpenAI. It's just reallocating cash from here to here, and it's just like writing off a lot of things, and it's a possibility to write it off. So if OpenAI collapses or something, where the money goes, nobody knows. So but you can easily you send this money through in different offshore accounts, and congratulations. The people who are involved in all these deals, they make themselves very rich. And I'm not saying that that's what's going to happen, but You know, certainly it has never been done in history before, right? But anyway, long story short, coming back to the indices here very quickly, the Dow Jones, and that's the situation. S&P, there we go. So far, so good. I was talking about this before. 6,764. We cleared it, and yep, we cleared the 20-day SMA. So next target is the 50-day EMA for me. That's because, again, as long as we stay below this, I mean, let me just double check very quickly. Where are we now on the price wise? 6,730, a little bit above yesterday's close, but still, you know. Anyway, look at this. If we stay below the 20-day SMA here, my next target is the 50-day EMA. Nasdaq again, beautiful decline. I talked about it. We had a nice little retracement back up. So I said that if we do push and stay above the 25,700 zone, I'm leaning towards the upside. But if it doesn't, there we go, ladies and gentlemen. Beautiful move to the downside. There we go. So we're almost reached my target. My target is around here. Actually, my target was the 25,000 kind of 200 zone right here. Reached it, and the next target was this upside line. Well, it's a beautiful move here, so I think that there is a little bit of chance of testing this, but if we do today we do break below it, I think that there is a problem. I think there is a problem, and I think that we could see further declines. DAX, the German index, let's have a look where we are today. Look, we're stuck here. We're stuck above this 23,684 zone. So if we do drop below it, I'm going to lean towards the downside. My next target is the 23,284.85 zone here, marked by the lowest point of September. And if that gets cleared, certainly the 200-day EMA becomes the next big target. The FTSE 100. We are, look, yesterday, yes, the BOE did not go for a cut, but they kind of hinted for a cut in December. So what I want to say here is that, so it's the, oh, I can see AUDNZD selling off. Okay, interesting, very nice. But what I said that, look, I mean, the potential December cut could be a positive thing. Maybe that's what's allowing the FTSE 100 not to sell off that much. However, I would say this one is still holding on quite well from all these other major indices. Let me just double check if what's happening right now in the cash. 9,710. Actually, the same. Oh wait, what am I talking about? It's open right now. Oof, I was kind of thinking it was closed. No, it's open already. So 9,710. Yep, that's where we're right now sitting at. So if we do drop and stay below the 9,696, 97 zone ish, then yeah, I'm gonna lean a little bit more towards the downside, and then we'll go from there. If you're looking at some upside here, then yes, the upside scenario is the 9,787. If we clear that one, a great move higher could be possible. But again, at the moment we're stuck, I would say. You know, we're stuck. I would ideally like to see a bit of a larger correction, actually. So look, you know, this is what I'm looking at. I'm going to draw a Fibonacci from the mid-October to the current all-time high, which is around here. This is 786. This is 787, and this one's 7. Yeah, this one's the current all-time high. So if this is the interesting bit. So this is where I'm kind of leaning towards 38.2. But for that, there needs to be a lot of clearances first. So let's not rush into things. If we do clear this area, yes, I'm going to go lower. My next target is going to be the 23.6, and then I'm going to go, if that gets cleared, the 38.2, which is comfortably sitting near the 20-day SMA on my chart here. Very quickly on DXY. Yes, a little bit of profit taking, a little bit of retracement. So look, this is what's interesting. I talked about this and I said I'm going to be bullish as long as we stay above the 200-day EMA. And we were, at one point, we were going higher, but then everything changed very quickly. A little bit of profit taking. yes, I think that the problem is the job data. Yeah, the problem is the job data, and well, initially, I was saying that we need to boost the US dollar in order to make the US consumer happy, feel happy about the Christmas period. But I think that the reality of it's coming to everybody's senses now, like that the AI is issue. There is an issue. All these. Uh, it's probably wrong to say small jobs. Like the entry level jobs that were, and of course the big CEOs think that these are non-important, but they're actually important because, well, that's there's the economy, and everybody's kind of slashing those jobs, so a lot of people are getting fired, and that's where the kind of the issue arises. And I think that everybody's coming to their senses that what, I'm probably not going to be able to spend this much on Christmas, and which is logical, to be honest with you, because you will have to, think about providing food on the table. So, long story short, I think that for now, we might see the US dollar kind of a little bit shaky, unless we'll see a headline coming out saying that, oh, you know what, actually we're creating more jobs. But I think at the moment nothing. We already we don't have any where to get the positive news from. The Fed, it's right now considering that maybe we should not go for a cut in December. Although, let's have a look at what's happening here on the Fed Watch tool. Let's see how was the percentage. But yeah, there we go. It's okay still that maybe we'll have this cut, but it used to be somewhere like a little bit higher, but okay, now it's decreased a little bit. But like I said, the issue is that we don't have where to get the positive news from. So maybe we'll get it from the government coming out of the shutdown. Hey, I think the market would welcome that, and I think that this is where the recovery could happen. So we've seen, I think, and this is where the play of buying the dip could happen. So these big companies which are selling off right now, and if the government announces that they're gonna come out of the shutdown, I think that could boost the stock market back up. But then we'll have to wait for the NFPs to come out. So let's imagine this, just like a hypothetical scenario, that we come out of the US government comes out of the shutdown, let's say, somewhere next week. And that means that, okay, we'll start getting data slowly. The data is going to be crap, but then we're going to be all waiting for the NFPs, and the NFPs will have to come out at the end of November or beginning of December. And let's say, and up until then, the stock market will be kind of rallying, because everybody will be so happy that the government is no longer in shutdown. But then we're getting hit by the 3 data sets of NFPs before Christmas, and it's gonna be, again, it's going to be a lottery, to be honest. Are they going to produce? Are they going to actually fabricate and show that everything is fine, or because, to be honest, why I'm using these words fabricated is because it's really difficult now to trust the quality of the data and be delivered by the Bureau of Labor and Statistics. Because they're going to have this backlog, and it will take them time until they can actually spit out something good, something reputable. Anyway, so long story short, for now, like I said, I'm going to be carefully watching this the DXY here. Look, if it pushes back above the 100.25 territory, yeah, I'm going to lean towards the upside. But for me, the downside, actually, I'm going to take a little bit of a more of a conservative approach here, and I'm going to wait for a drop below this upside line, below this, probably below this upside line taken from the lowest point of September. Then yes, I'm going to consider further declines. VIX, just a quick glance. Yes, VIX is rising because, well, there is a bit of a problem. Currency world, ladies and gentlemen, let's have a look. AUD very quickly, because again, I'm running out of time here. AUDUSD, certainly we're on a brink of falling off. despite maybe the US dollar being right now on the kind of, not as strong as it was a few days ago, still AUD I think could be the weaker one, just because it's a risk currency, and we're currently in risk off mode. So everything adds up for AUDUSD actually to drift a little bit lower. AUDNZD, now this is what I was talking about. This is where I was saying a little bit of retracement. Look, in general, this is rallying. I mean, this was like rallying very, very good. Today, look at this major move to the upside. Boom, very nice. This is what I'm missing right now. 15-minute chart. There we go. Look at this from the 1.1560 something and all the way here. This was a nice move here to the downside. And honestly, the daily chart, look, I'm not giving up. I'm not saying that this is now time for a move lower, but certainly there is that little element here. So we'll see how today's day is going to play out, to be honest. If somehow by magically it's going to travel all the way back down, create for us here something like a shooting star, now that would be interesting going into next week. AUDJPY stuck here, rebounded from this upside line, so it's not giving up. The bulls are not giving up here, but certainly I have to say that the problem is this upside line, which is kind of providing a little bit of support. If that gets cleared and we do drop below the current lowest points of this week, near the 98.83, then yes, I'm going to go towards the downside. Euro USD, ladies and gentlemen. So this one rebounds, yes, because the dollar got hit. Euro USD rebounds, but still remains below this 1.1542. So as long as we stay below that area, I'm still leaning towards the downside, because we're really not far from that 200-day EMA. It would be a shame not to use that, not to test that out. EUROJPY, now this one's a pain in the bottom, to be honest. At the moment, it's kind of oscillating around the 20-day SMA here, so not really happy with this pair, but still watching it carefully. Euro NZD. Now this one's, I'm loving that one. So we finally got the move. We got the move above this hurdle, this 2.0310. I talked about it this week. We pushed and stayed, and great. We moved higher, 2.0525-ish, or actually 2.0485. There we go. We reached that. We overcame that. So look, I'll say it this way. As long as we stay above this hurdle, I'm going to continue aiming higher. But if we suddenly start dropping below this, I'm going to consider a little bit of a move to the downside. Euro GBP. Euro GBP. So look, Euro GBP, it's an interesting one. I mean, I keep on saying this is my love and hate relationship, but it's I continue monitoring it. It looks like a bullish flag, to be honest, but what I need here is a clearance of this barrier here, the 0.881718, and then yeah, I'll go higher. GBP. So yeah, actually GBPUSD. Now this one's interesting. So look at this. Yesterday we got a boost because the rate remained unchanged by the BOE, so we got the boost for the British pound, but today it's kind of stabilizing again. Look, the 1.3142 provided fantastic resistance. However, I would prefer to wait for a drop below the 1.3015 zone in order to go lower for the upside. Now, what I have here is basically this steeper downside line, and for now it's a tentative one. But if we do push back up to the 1.3142, I will consider a move back up, a larger retracement to the upside towards this downside line, and then we'll go from there. Very quickly on USDCAD first. Still okay-ish. Still looking somewhat positive here, I would say. I think, look, as long as we stay above this 1.4080 zone, then yeah, I'm going to continue targeting the upside. If we suddenly fall back below the 1.4080, yep, I'm considering a little bit of a move lower. USDJPY is a little bit of a mess, to be honest, and this upside line initially was a good idea, and now it's no longer is, and yeah, it's just it's a little bit of a mess right now. So look, I'll keep it simple. If we do push above the highest point, the current highest point of November, near the 154.48, Yes, great. I'm going to go to the upside. If we do fall below the 20-day SMA, which has been, as you can see, a good area of support, this middle line of the Bollinger Band, then I'm going to consider a move lower. USDCHF, one of my favorite ones actually, which is just a copy of DXY almost, to be honest. I mean, it's showing some positivity. It's interesting. So let's see if we can remain above this 100-day EMA shown as the blue line. If we can, then yeah, my next target is, well, higher, but my next target again is the current highest point of this week near the 0.8124, and then we'll go from there. Ladies and gentlemen, commodities. Let's jump into commodities. Gold surpassing that 4,000 zone. So basically what we're seeing here right now is a little bit of a coiling up moment. Look, I will show you what I'm talking about. So this is a little bit of a triangle happening here. Yep. So we're kind of trying to understand which way this could break out to. Now, ideally, I would like to see a break to the upside. However, we look at the prevailing trend, and it was to the downside. So the greater chance for this one to break out is to go lower. But we're currently knocking on the door of the upper side of this triangle. Like I said, ideally, I would prefer to see this one pushing higher, testing the 20-day SMA here, and then reversing back down. Why not? But certainly the market doesn't always deliver what I want it to deliver, so I'm going to be realistic, and what I'm going to do here is I'm going to not do anything. I'm going to wait to see what's going to happen here. If we're going to stay below this, or in general within this triangle pattern, then yeah, I'm gonna just, like I said, not do anything. But once we start seeing breakouts, then that will become a little bit more interesting. Silver also pushing back up, and to be honest, I would like to see silver. It's not far from that. I would like to see silver testing the psychological $50 mark. But the thing is that if it's gonna do that, then it's gonna surpass my resistance barrier, which is around here. And if they surpass this, then the problem is that, well, we could be actually getting a move back up here. So, that's what I'm saying. That's why it's a little bit tricky. But you see the thick line here? This is actually running from the monthly chart. And this is the big upside resistance line, which doesn't kind of really make sense a little bit, but it's capturing the peaks. And sometimes it does make sense. So maybe, maybe this month we could see a little bit of a rally here. I would love to see a rally in November, test this out, this upside line, and then kind of fail to move above it, and then reverse back down. Because honestly, we're living through some history here. So, my other issue is that maybe we might not even go higher. Maybe we had enough. Maybe it's time for a reversal back down. So, ladies and gentlemen, like I said, do not be surprised if, let's say, history is going to repeat itself. Like, for example, here, where, you kind of think that maybe it's going to go a little bit higher, but actually, boom, goes to the downside. So it will go down. I'm not going to say anything. It will go down because it cannot really stay like this, forever. And that's why I'm going to just be a little bit more on the careful side. We're seeing some issues in the platinum and palladium side, especially palladium. I like this one. I still kind of, from all the metals, I'm more bullish on this one, but I would like to see. But if the other ones are going to go down, I think that it will have its effect on palladium as well, and we could see a nice drift lower here. Copper, let's have a look at the copper. This is actually what I'm looking at. These are monthly charts. This is a month. So if I jump back into day, it's holding on to this 20-day SMA here. So it's still okay-ish. Sugar, like, okay. Now this is very interesting. It keeps on knocking on this 14.09. Keeps on going through the door, but not staying, going through the door, but not staying. So it's actually, and I think the seasonality should be coming through soon, because I think that the seasonality, I need to double check this one actually, because there is a cycle for sugar, and I think that we're getting to the point where it could actually, rally again. So if we compare the periods, let's say from, this November, like November's, let's say last year, we saw declines in November, right? I mean, it kind of drifted lower. It then picked up only in January. The big rally happened here. Here, the big rally happened in September. So again, not something, but let's say January, again, January was the in 2024 again. I think seasonality kicked in here, so the big decline came in November actually, so maybe more declines here could happen as well, judging from the, like I said, the cycles here. And going further, 2023 again, January rally, and November time, yeah, that's the one, the big sell-off here at the end of 2023, November. Now the opposite happened here in November, October, yeah, November of 2022 we rallied. Very interesting. So so yeah, right now we're at very like huge lows, I would say. Look at this. This is the big picture on sugar, and I do like to look at these commodities because they do present themselves with some nice opportunities. Now, it seems like there could be some more downside to come here. So, long story short, where it could be the next target? Look, we are now at a very strong area of support, because this level here has been a good area of resistance and support as well. So, you know, if we do clear this $14 mark, I think, yes, this is like opening the door to some much lower areas. And but then again, later on, it could be actually a nice good asset to examine. Soybeans, the fading moment a little bit, you know, went away. Yes, because again, I think this whole China deal, there are issues between U.S. and China still. Although they can, you know, say that they made a great deal and everything like that, but I think that just a ceasefire for a year. But you know, still, I think the market is worried. You know, what's going to happen after that? Okay, oil, one of my favorite ones. Look at this. We're still awesome. We're still flirting with that $60 mark. We did drop yesterday, but now we're picking back up. So we're oscillating around that $60 mark. We rebounded from that 20-day SMA. So everything is really, really kind of shaky still. I mean, there is looking at the technical picture, it looks bullish. I'm not gonna lie, although I'm bearish, but the technical picture looks bullish. You know what? It's very easy to solve this problem. Just basically wait for breakouts. If we can get a break through this downside line, this is the shorter one, which is drawn from the high of the 24th of October, then yeah, I'm going to consider slightly higher levels, especially if it pushes above the 50-day EMA shown here as the green line. Brent, again, similar story, rebounding from the 20-day SMA, again dropping, but then failing to stay below it. So yep, we're pushing back up. Again, similar story. Like I said, in general, I'm bearish, but this is just, like I said, this bullish flag, this bullish pennant idea is really not letting me go. And although I'm, like I said, I'm bearish, but look at this. It's also a possible descending triangle pattern, and that means it could be a bullish triangle. So it could be a bullish setup here. So yeah, we're waiting for the exit. And finally, natural gas, very quickly. This one's to the moon, continues to, you know, fly high. You know, they're going to power probably data centers with natural gas, because it's cheaper, and just burn more gas and, you know, create more energy. Anyway, so ladies and gentlemen, finally for dessert, Bitcoin. So this is the joke that I was talking about in the beginning of the show, that you know, Bitcoin needs a partnership deal with OpenAI in order to boost its stock. Its stock. It's price back up. You know, but actually, this is the interesting bit, how the brain works, because I was saying stock, and this is what I've said in the MarketsTalk webinar recently, that and in the recent update here, the crypto update, which I did a day ago. On Wednesday, basically some cryptos are now, we're looking at them as if they're stocks, you know. So they're kind of getting this classification, you know, because some of them are moving like stocks, some of them are moving like commodities, and actually there are some that are actually moving like currency pairs. So I think that this is where we're heading to. I think that this is where we're gonna see that, you know, some cryptos actually might become more like stocks more, like they can fall under these regulations and not regulations, they can fall into these categories, you know, of stocks. So maybe something will happen in the future where, you know, they're not going to be called cryptos. They're going to be more like, hey, if you want to continue existing, you have to actually, you know, change your classification. You can need to become something, one of those, you know, hey, hashtag blackmail. Anyway, so for now, look, the 100,000 on Bitcoin is holding very nicely. I talked about this on Wednesday, and I said, look, as long as we stay below the crossroads of these two trend lines that got broken, and yeah, I'm going to lean towards the downside, especially if it drops below my 50% on the Fibonacci retracement. I hope you can see it among these lines. This is here. The Fibonacci retracement is drawn from the current lowest point of this year to the current highest point of this year. This is the point. Like I said, if we do clear the 50, my next target is the 61.8 here, and that's roughly around the 94,000 zone, and then we'll go from there. Bitcoin Cash, I like Bitcoin Cash. It's still holding on, and it's still holding below this, above this 462 territory. But if we do clear this hurdle, then yes, lower levels could be met. Ripple, yes, again, near key support, need the clearance of that one in order to go lower. This is roughly around 2.19 zone-ish. Ethereum also. Now this one is a little bit more bearish, to be honest, and I'm leaning a little bit more towards that psychological 3,000 zone. I think this could be doable. I think it's a good area, so let's see if we can reach that one. And Litecoin, one of my favorite ones, this one's rebounding, but still holding below this 90.30 zone. If we do stay below this area, yep, more sellers could join in. Dogecoin, again, looking a little bit still more bearish, but I think this is a good area of support. This one, the thick line here, basically the two lines combined, because it's such a good area of support here. 0.14 kind of 30-ish zone, and I think that this is a good, very good area of support. Why not to reach it? I don't know. Then rebound from it, hey, you know, but again, the market doesn't do what I wanted to do. Anyway, Polkadot is rebounding back up. Very interesting, actually, from 2.5, or actually 2.3040 all the way back to 2.82. Oh, very, very interesting here. Polkadot, okay, picking up buying interest. We're pushing back over the 2.77 territory here, so we're going for that larger correction back up, but in general, I will get more bullish if we do see a push above this downside line. Yep. If we get a clearance of that, then yes, more buyers could join in a way. So this is what I'm gonna do here very quickly. There we go. So yeah, and finally Tron. Now, like I said, when I was saying that, you know, some cryptos are behaving like stocks, like commodities, or like currencies. Now Tron USD behaves more like a currency, to be honest, like a currency pair, and you know, with not minimal, but lower volatility here. But again, it's an interesting one. So for those who like to be in cryptos but don't want to see the big volatilities, then Tron could be a better option, because if you do see major big things like these moves, this is actually something like really extraordinary happening probably. So yeah, I'm not, like I said, I'm not saying for you to go and trade Tron, but just like I said, you know, it's my observation. This is like what I'm saying. Again, I might be wrong, so you be the judge. Honestly, you be the judge for yourselves. But in general, like I said, Tron USD is quite an interesting pair, quite technical, to be honest. Hey, let's see if we can drop below this 0.2764 territory. That's my downside scenario. I do like this 0.26 area in general. I think it's a good potential area of support, so hey, why not to reach that one? But again, only if we do get a confirmation break below this hurdle right here, the 0.2764. Ladies and gentlemen, that is a wrap. Thank you very much for watching and listening, ladies and gentlemen. Thank you very much for your support. As always, your views, your likes, I hope comments will come through, but your views, your likes really help. So thank you very much for that. I hope, like I said, you'll have a fantastic trading day today. I hope you'll have a wonderful a wonderful weekend, and you'll feel nice and relaxed, ready to attack the markets next week. And like I said, join my webinar on Monday, Markets Talk webinar, yes, and don't forget to subscribe, because I do release these top news videos occasionally where I pick up on a certain topic and just kind of talk a little bit about it, a little more in detail about it, and then yeah, hope you like those as well. Ladies and gentlemen, thank you very much. Have a beautiful day, and I'll see you later. Bye-bye.